Welcome back. I'm your host Tom Bruni and you're watching another edition of What the FICC, the weekly show where we discuss the most important chart or theme from the fixed income, commodity, or currency space. In last week's episode, we discussed the historic rally that's taking place in lumber prices. We went over the drivers of that rally, as well as where we think prices are headed based on their historical tendencies. If you missed that video and want to catch up, you can click right here. Otherwise, let's jump right into this week's topic, cryptocurrencies. Now, we're going to be approaching the crypto market as we do with any other market, from a purely technical perspective. I'm going to save the debates for what Bitcoin versus Ethereum is, or Bitcoin relative to Litecoin. I don't know what any of those are. To me, they're all just coins that are moving and prices that we can analyze. So, where do we start? I think it's important to look back to our July 23rd article titled Why We're Buying Ethereum's Dual Breakout, and analyze the conditions of what was happening then, what prices have done since, and then we can approach how things are going to move forward. Let's see what was happening. If we look at Ethereum relative to Bitcoin, which was the chart that really caught our attention, we saw a massive multi-year base forming, prices emerging from that base and accelerating to the upside. The thesis there was that as long as prices were above 0.024 in that ratio, then we'd expect to see Ethereum outperform Bitcoin and that ratio to head up towards 0.04. And on an absolute basis, looking at Ethereum relative to the US dollar, 225 was the level. We were waiting for a breakout and we finally got it. And our target was up near 400. Additionally, in that post, we outlined what it would take to get bullish on Bitcoin, which was also breaking out on an absolute basis. Prices were getting above a key resistance level near 10,500, and our target was up near 13,000. Unfortunately, prices haven't fared as well and continue to chop around this wide range, which is now potentially resolving. So, now that we understand our original thesis and where we've come since, let's take a look at what's happening in today's price action and try to figure out where prices are headed next. Here we've got a chart of Ethereum relative to the US dollar. As we can see, prices met and exceeded our price objective near 400 over the last week, and they've been trying to push to new highs. Unfortunately, they sold off over the last few days, putting that breakout in jeopardy. Now, from a pivot low perspective, 365 seems to be a key area. If prices break decisively back below that level, that'll show that it's not only confirming a failed breakout above that $400 level, which is important longer term, but any of its short-term momentum that's built up is going to be broken. So what's holding it back? Ethereum has been the leader. Why can't it push to new highs? Well, I think the key lies in what's happening with the rest of the space. Take a look at Bitcoin. After the initial breakout, it really hasn't done much since. It's been shopping in this narrow range between 10,500 and 12,000. And yet, each time prices tried to press to new highs, they've been pushed lower. And now, we're potentially seeing this consolidation resolve to the downside. Take a look at Litecoin as well. Here we've got a daily chart showing a similar situation. Prices tried to break out, have gone nowhere for 6 weeks, and are now pushing toward the lower end of that range. Now again, I don't want to get into the minutia of what a Bitcoin versus an Ethereum versus a Litecoin is. All we know is that historically, the best rallies have come when they're all moving together, and we're not seeing that right now. We're seeing two of the three major coins struggle to gain traction while Ethereum moves to the upside. In our view, that's unsustainable. Alright, we've covered a lot in this video, so let's take a step back and review quickly before we wrap up. First point we want to make is that our initial thesis that Ethereum on an absolute and relative basis would successfully break out and act as a leader for the rest of the crypto space. That's played out, and we've met both of our price objectives. Unfortunately, Bitcoin and Litecoin did not rally to the same extent. We were looking for Bitcoin to break above 13,000 to signal a strong structural breakout, and we were looking for Litecoin to break 88 on the upside to show that same strength. Neither of them have done that, and as a result, we're seeing a failure in the breakout of Ethereum. The crypto space tends to move in tandem with each other. So regardless of your views on Bitcoin, Litecoin, Ethereum, over the long term, if they're all participating to the upside on an absolute basis, that is a good thing for the market. It is a healthy development, and we're not seeing that yet. So how do we approach this space going forward? Well, I think for our time frame, it makes sense to take a step back and avoid this market altogether. Until Bitcoin and Litecoin begin exhibiting the same level of strength that we're seeing in Ethereum, it's unlikely that Ethereum is going to continue its trend to the upside on its own. So what are we looking for? We want to see Ethereum, US dollar above 400. We want to see Bitcoin above 13,000. And we want to see Litecoin above 88 to confirm that these structural long-term breakouts are intact and that the crypto space is indeed ready for its next leg higher. All right, that's all we've got for you today. If you enjoyed this episode, make sure to leave a comment down below. We love your feedback. And while you're down there, drop us a like and make sure you're subscribed. That way you don't miss any video updates from myself and the rest of the team here at All Star Charts. Thanks again for watching, and I'll see you guys back here next week for another edition of What the FICC.